Go.
Hi everyone, Amy Valdivia here, and today I want to talk to you about income, specifically how your income impacts your mortgage application. When you apply for a home loan, it's very simple. You have to have a job of some sort, whether you're employed with a company or a government agency or you're self-employed. That is your job, source of employment, source of income. We need income for qualifying purposes. The golden rule, if you're employed somewhere, or actually even if you're self-employed, it's 2 years worth of employment. We want to see 2 years worth of employment. Depending on the loan type that you've applied for, there may be some caveats to that rule, but the general rule is 2 years worth of employment history. Now, what if you are a college student and you have just become certified in your particular field with your degree, and now you've got a job offer in that field, yet you've only been working at the company for 6 months? Yes, in some particular cases, we can use your diploma from college or a trade school specifically for that field as part of your employment history. Again, that's a caveat that we apply to the guidelines, as well as there's additional overlays that we have to apply. So we will be looking at your documentation a little bit differently and applying different guidelines. When we look at this income documentation, we also want to look at your pay stubs. So we're usually going to look at a trend on your pay stubs of, number one, the consistency of the hourly income or the salary income that you earn. We also want to look at your W-2s and your tax returns. And we want to ensure that your income has been steadily rising or is stable. We don't want to see a decline in your income. If you're self-employed, we're going to look at 2 years worth of tax returns, whether you're a Schedule C sole proprietor or even your corporate returns or partnership returns, if that's the type of business that you're running. We'll actually want to see that the business is solvent. We want to see the gross receipts as equal to or rising each year. Then we also will take a look at the write-offs. We'll look at the income specifically given to officers, any payroll applied as well, any major outstanding short-term debts as well as long-term debts that the corporation is required to pay. And we'll factor all that in, and we will take a 2-year average of that income, and then we'll give you that for qualifying purposes. Now, what if you earn Social Security income or some type of retirement income, maybe from a pension? What we'll want to take a look at is we will want to look at your award letter, also known as your retirement release letter. Sometimes that's what they call it. For some federal employees, they actually get a booklet when they retire, and it tells you all about your benefits during retirement, including what your initial pay is, and then once the paperwork is finalized and completed, what your final pay will be. So we'll want to take a look at that book. That award letter tells us specifically when this income is going to start and the amount of that income. That is the income that we will use for qualifying. With much retirement income, Social Security, disability type of income, we want to see that you will receive it at minimum of 3 years in the future, as well as we'll see probably direct deposits. Most often that it's paid to borrowers via direct deposit. They usually don't cut checks. So we'll look at the bank statements to see the direct deposit to confirm the income. In addition, at the end of the year, you won't receive a W-2 for that type of income. You will receive a 1099. That income will be cross-referenced to the tax returns to make sure that that's all equal and the exact amount of income we're using for qualifying. We'll take a look at that. Now, what if you are a veteran and you actually receive disability payments from your service-related injury? I apologize. We will see that income not only on your bank statements, because you'll be receiving it direct deposit. We will also see the 1099s that you receive each year, and on your certificate of eligibility, they will verify that you are receiving service-related income. Most likely, you will have your VA funding fee waived as well. So when we're analyzing your income for a mortgage application, you can see we're looking at all sorts of information depending on whether or not you're employed, self-employed, or even retired. If you have a specific scenario and you need some advice, please do not hesitate to call avaldivia@afncorp.com or 626-485-4673. I'm happy to help. Thank you.